Welcome to Next Gen Digital Finance. Forget the headlines that claim real estate is dead. In 2025, it's not just alive, it's evolving, and it remains one of the best tools for building serious, long-term wealth. But to succeed, you need to understand the new rules. While other investments like crypto and stocks get all the buzz, real estate still offers unique advantages that make it a cornerstone of any strong financial portfolio. We're cutting through the noise to show you exactly how real estate remains powerful and how anyone can leverage it, even in today's new economic landscape. Quick disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research or speak with a licensed professional before making investment decisions. Why real estate still matters in 2025. Real estate offers a path to financial stability and wealth creation that is difficult to replicate with other assets. Here are the core reasons it continues to be a top-tier investment. Appreciation. Property values tend to rise over time, especially in growing cities. This isn't just about inflation, it's driven by population growth, economic development, and limited supply. When you own property, you're not just buying a house, you're buying an asset that naturally increases in value as the market grows around it. This process, often called equity growth, allows your initial investment to multiply over the years, often without you lifting a finger. Rental income. Real estate can generate consistent, reliable monthly cash flow. Whether you have long-term tenants providing steady payments or higher-yield short-term guests through platforms like Airbnb, this income can cover your mortgage, property taxes, and operating expenses. This effectively makes your investment pay for itself and then some, providing a stable stream of income you can use to pay off debt, invest elsewhere, or save. Avasho. This is the real magic of real estate. You can control a large asset with a relatively small amount of your own money. For example, by putting down just $30,000, you can control a $300,000 property. That's using other people's money, the bank's capital, to accelerate your wealth creation. As the property appreciates, you gain equity on the full value of the asset, not just your down payment, giving you a unique advantage few other investments offer. Tax benefits. Real estate provides a number of powerful tax advantages. These include deductions for mortgage interest and property taxes, as well as depreciation write-offs that can significantly reduce your taxable income. These aren't minor perks. They can substantially boost your net returns and are a key reason many wealthy individuals use real estate to manage their tax liabilities. It's always smart to consult a tax professional to understand how these benefits apply to your specific situation. Tangible asset. Unlike fleeting stocks or volatile cryptocurrencies, real estate is a physical, usable asset. You can see it, touch it, and live in it. It provides essential housing and always retains a fundamental resale value. In times of economic uncertainty, tangible assets like real estate often provide a sense of security and stability that digital assets cannot. The 2025 real estate landscape. The rules of the game have changed, but with change comes opportunity. Here's a breakdown of what the real estate market looks like in 2025 and how you can position yourself for success. Higher interest rates. Interest rates are generally higher now than they were during the historic lows of 2020 to 2021. For example, the average 30-year fixed mortgage rate might be hovering around 6.5 to 7.5% today. But instead of letting this deter you, smart investors are using strategies like negotiating with sellers for concessions to cover closing costs, or exploring adjustable rate mortgages, ARMs, if they have a shorter-term plan. Most importantly, they are planning to refinance later when rates inevitably dip, positioning themselves for long-term gains. Stamina and remote work migration. The widespread adoption of remote work has shifted demand away from expensive urban centers towards smaller cities and suburban areas. People are prioritizing bigger spaces, home offices, and a better quality of life. This creates opportunities in emerging markets with strong job growth, appealing amenities, and a more affordable cost of living. These are the hidden gems of 2025. Don't limit your search to traditional hotspots, remains PANS. You can see fractional ownership. You no longer need to buy an entire property to get into real estate. Platforms like Fundrise, Arrived Homes, and Lofty allow you to invest in income-generating real estate with as little as $100. This democratizes access, allowing you to diversify your portfolio across multiple properties without the massive upfront capital or the hassle of being a landlord. AI tools. Technology is transforming real estate from a guessing game into a data-driven science. You can now use AI-powered platforms to analyze markets, forecast ROI, identify undervalued properties, and even streamline tenant management. These tools are making informed decisions faster and more accessible for everyone. You can see V-Rise and 1 years, build-to-rent communities. This is a rapidly growing trend where entire neighborhoods are designed specifically for rental income. These communities are often professionally managed, offering a new avenue for long-term investors seeking stable returns without the burden of individual property management. It's a scalable and efficient way to invest in residential real estate. Just to start. How to get started, even with less money. You don't need to be rich to start investing in real estate. Here are 5 beginner-friendly strategies that work with diverse budgets. House hacking. This is one of the most effective beginner strategies. Buy a multifamily property, like a duplex, triplex, or fourplex, and live in one unit while renting out the others. Your tenant's rent helps cover or even completely pays your mortgage, allowing you to build equity while living for free or at a significantly reduced cost. REITs, real estate investment trusts. Think of REITs as mutual funds for real estate. You buy shares in companies that own income-generating properties, like shopping malls, apartment complexes, or warehouses, through your regular stock brokerage account. This gives you diversification and dividend income with zero landlord stress. Crowdfunded real estate. Sites like Fundrise or Realty Mogul pool money from many individual investors to buy larger, income-generating properties. This allows you to invest small amounts into diversified projects like commercial buildings, earning passive returns based on rent and appreciation. Partnership investing. If you don't have enough for a full down payment, team up with a trusted friend, family member, or fellow investor. You can split down payments, share responsibilities, and leverage each other's capital to acquire properties you couldn't on your own. Just be sure to have a clear written agreement in place to protect all parties. Word to own. In competitive markets, this can be a great entry point. You lock in a property now with an option to buy it later at a pre-agreed price. While you rent, a portion of your rent payment may go toward your future down payment, allowing you to get your foot in the door and save up to buy the home in a few years. Common mistakes to avoid. Real estate can build incredible wealth, but it can also lead to costly mistakes. Avoid these common pitfalls to protect your investment. Skipping due diligence. Never skip the homework. Always get a professional home inspection and research the area thoroughly. Look at crime rates, school districts, and future development plans. A lack of due diligence can hide costly problems and lead to a bad investment. Over-leveraging. Don't choke your cash flow by borrowing too much. Leave ample room in your budget for unexpected expenses and economic downturns. Maxing out your debt can turn a small setback, like a leaky roof or a few months of vacancy, into a financial disaster. Ignoring maintenance costs. The unexpected will happen. Budget a percentage of your rental income, often 5 to 10%, specifically for repairs and maintenance. Neglecting this leads to bigger, more expensive problems down the road and can erode your profits. Underestimating vacancies. Tenants will come and go. Factor in downtime by planning for at least 1 or 2 months of vacancy per year when a unit might not be generating income. Having reserves for these periods is crucial to avoid financial strain. Forgetting legal protections. Protect your assets and yourself. Always use ironclad leases drafted by a legal professional, get comprehensive landlord insurance, and keep all contracts and communications in writing. These steps protect you from potential legal headaches and financial losses. 6 smart ways to make money with real estate. Let's get to the money part. Here are 6 proven ways to earn income from real estate this year, no matter your starting point. 1. Rental income. This is the classic, most consistent method. Buy a property and lease it out to traditional, long-term tenants. It's all about consistent cash flow and slow, steady equity growth. Short-term rentals. Platforms like Airbnb and Vrbo offer higher income potential, especially in tourist destinations or business hubs. While this requires more active management, the returns can be significantly higher if you manage it well and understand local regulations. This strategy involves buying an undervalued property, renovating it to increase its value, and then selling it for a quick profit. It requires a good eye for potential, management skills, and a solid understanding of local market demand. High risk, but potentially high reward. Wholesaling. This is a great low capital entry point. You find distressed properties, get them under contract, and then sell that contract to another investor for a fee. You never actually take ownership of the property yourself. This is great for low capital and fast returns if you're a good networker. For those looking for passive returns on larger projects, you can join investment groups, syndications, or crowdfunding platforms to buy commercial properties or large apartment complexes. You get a share of the profits without the day-to-day management. Equity appreciation. This is the simplest strategy. Buy in a growing area and hold. As the population grows, the local economy strengthens, and inflation kicks in, the property value naturally goes up. This paper wealth eventually becomes real cash when you sell or refinance. Patience is key here. Bonus tip: don't limit yourself to just one strategy. Combine them for maximum impact. For example, house hack a duplex and Airbnb one unit, or invest in a REIT while you're saving for a down payment for your first fix and flip. The possibilities are endless when you get creative. In 2025, it's smarter, more digital, and more accessible than ever before. It offers a tangible path to financial independence and long-term wealth that few other investments can match. The key is to start smart, stay informed, and avoid common pitfalls. Want more ways to build your future income and achieve true financial independence? Then make sure you're part of the NextGen Digital Finance community. Hit subscribe and join us next time on NextGen Digital Finance, where we demystify the world of money, one smart strategy at a time.